Good morning, ladies and gentlemen. Good day and welcome to the show on this Thursday, the 28th of July, 2022. Thank you for tuning in. I see a couple things out there that are extremely alarming. One is we just underwent a sea change, sort of. There was a big change yesterday in the markets, in the financial system, that is kind of sort of going unnoticed. It's the play ahead of the Fed pivot. It's already happened pretty much, and the thing is one of the things that's alarming is how we're going to barrel toward inflation now in the next number of months because of what's going on. Bad news is now starting to become good news again. The markets are starting to turn around a little bit. We're seeing the gold and silver price turn around a little bit. We're seeing cryptocurrency starting to turn around a little bit. I was a little bit ahead of this, by a couple days is all on my forecast here. I saw the beginning of it. Now I see it getting stronger. We're seeing the bond market, movement in the bond market. But what's really disturbing me more than anything out there right now is what I'm seeing happening with Lake Mead out in the western half of the United States. And why this is disturbing is because 40 million people rely upon Lake Mead for their water source. These are absolutely astonishing. And what's happening with it? How quick it's disappearing. Anyway, we're going to get in there. We're going to take a look at some of this stuff. We're going to start the charts right here. And let me see. Let's take a first look at Lake Mead here. What's happening is absolutely astounding and scary. We're looking at just from 2000. We're looking at 2 years here. From a healthy reservoir. See the dark black looking reservoir on the left? That means it's deep. That's why it's dark looking, because it's very deep. The water's very deep. And see how it's lightened up to this light greenish color? That's shallow. That's shallow water. Not only is it drying up and getting a lot smaller over in the last 2 years, but the water's disappearing from parts of it. Like it's being drained by like half each year. It's like it's disappearing so fast. If it continues on at this pace, in another year or two more, it's gonna be gone. There ain't even gonna be a lake there. It's just gonna be dry riverbed. And we got 40 million people relying upon this water as a water source. And then we also have irrigation. Tremendous amount of produce, vegetables, and things like that feed America come from this area too. So what are we going to have? 40 million people roaming looking for a home because they got no water, and also a third of our produce or half of our produce gone, in the supermarkets and stuff. What are we going to feed? What are we going to eat on? You can't rely upon the grain coming from Ukraine anymore to feed you. And that's like 25% of the world's grain supply. These are serious questions and serious problems that have no answer to them. But at the same time, the financial system is seeing this. Look at what's happening with silver today. 73 cents up today. And we had another big move yesterday. We're back up near $20 again at $19.81. So this move we've seen over the last 2 days is probably the difference between mining production costs. So I think we were just about down to mining production costs for a few days there with silver. But didn't last real long. So it might not too adversely affect the mining production, because now I think we're back above mining production cost again. But talk about a value. I heard word that there's some big buyers moving into the silver market right now, and they want physical. Smart money, I guess, has been moving in over the last few days and buying in on these prices that are under $20. So it's up 70 cents today so far. Let's take a look at gold. And why this is a serious thing, this sea change we've seen this over the last few days with the Fed raising rates 75 basis points. Okay, and we see the economy starting to boom alive again. Why? I mean, we just declared a recession, for crying out loud. An official recession. And the Fed raises rates by 75 basis points on top of that. And we see everything start to come back up again. You have to question that logic. But the answer is very complicated, but it's just speaking volumes about us moving toward having more profoundly higher inflation in the future. And look at where we've come. We were putting in a print on the CPI. I think it was like 1.4%, right? And boom, it's up over 9%. The CPI, Consumer Price Index. Okay, so we're seeing this inflation. This means by the official metric, which is probably half of the actual inflation numbers, you're going to lose 9% of your money's purchasing power. Oh, your money's going to stay the same. If you got $100,000 in the bank, you'll still have your $100,000, but it's only going to purchase $90,000 worth of merchandise next year. And that's if it stays where it is right now. It's not going to. Now, you know, for years now I've been telling you this inflation's coming. It's going to get a lot worse because we just made this change in the markets. And as far as a crash in the markets, I'm not ruling that out entirely, but it's starting to look less likely. It's looking more likely that they're going to continue to support the markets right through. I mean the central banks, including the Fed, and they're going to make the inflation worse. But what other direction can they go? I don't see them letting everything fall by 90%. The system can't withstand that. The system is so fragile right now. Just look at this right here, what it says here on Zero Hedge. It says Treasury yields are collapsing. A combination of perceived dovishness from the Fed has seemingly re-engaged its bad news is great news narrative. And this morning's dismally worse than expected negative GDP print has prompted a collapse in Treasury yields. But what it says down here a little bit further on, it says that the bottom line is the economy is far too fragile to handle this type of tightening in the medium term as the Fed keeps the pedal down. In other words, the Fed is pushing their narrative, and they're going to continue. But the economy is extremely fragile. So if they do get some type of massive turn down that could happen really fast, that could happen, I'm not going to say it won't, they're going to have to rectify it very quickly. And that's just going to mean more inflation again. So either way you cut it, the inflation genie's out of the bottle. And it's going to continue to march forward, ultimately, until it destroys the purchasing power of your dollars. And, you know, okay, think about your savers out there. They all know now they're going to lose 9% of the purchase, at least 9%. That's by the metric from the CPI. Now, if you go to other places that say, hey, you know what? That's not the actual rate of inflation. The actual rate of inflation might be upwards of 20% right now, but we could argue about that all day. The real bottom line is you're going to lose at least 9% of your money every year. So how many people out there are going to be willing to just kind of sit on their money? Most people are going to start to say, hey, you know, 9% is too much now. I mean, yeah, they would sit on their money if it was only 5% they're going to lose in a year, or 1% or 2%. And that's what we did have. And they would still sit on their money in the bank. But at this point, when you start moving more than 10% per year, people start to get itchy and they start to say, I want my money in something that's not going to lose value. And you know this argument about gold and silver. I hear it all the time. They say, oh, what kind of a bargain is gold and silver if I go out and I have to pay the premium, and then if I go out to sell it, I basically lose the premium I paid. And I have to take even maybe even lower than spot. What kind of a bargain is that? You know? But what they're not realizing is on the other side of the coin, they're making that their savings, the silver or gold. And it's slowly going to go up in price in this kind of environment. If maybe not even so slowly. Look at what's happening today. Just go over the chart here. Look at this. It's up. Gold's up $18.60 today. So as the price moves up on these metals, and it pretty much has to at this point, I mean, because they got a floor under them at mining production cost. This is your savings that is probably going to start to keep up with inflation now. I know we've been through a hard time, and that's because of manipulation of this gold and silver price over the last few years. But I think that's coming to a close pretty soon. And so, where can you keep your money? I mean, you keep it in the bank, you're guaranteed to lose 10% or 9%. Or maybe it's even closer to 20%, but we could argue on that. More and more people are going to say, hey, I'm not keeping my money in the bank anymore. It's not worth it. So where can you put it? You're going to have to put it in something real. Because everything else is dollar denominated. Put it in something real, as your savings. And it acts as insurance. In case, especially if you got something real that is got no counterparty risk associated with it. Okay, cryptocurrencies today. We're looking at cryptocurrencies at 1058, looking at a Bitcoin price of 23,211. Let's take a look at the Dow Jones. It's up 78 points. I'm going to refresh the page. 79 points up at 32,277. Oil is up today at 97.42. We're looking at the MOVE index, and the MOVE index is 117.28 today. This is your credit markets, and the volatility in the credit markets. How stable are your credit markets? Well, the MOVE index, as it goes up higher, the credit markets are more unstable. They're not unstable, I should say. There's less stability as the MOVE index gets higher. And we see over the course of the last year, it's over doubled. Bonds and rates, we're looking at falling yields today. On the 10-year, it's fell 5.2 basis points to 2.68. On the 30-year, it's at 2.99. So it's hovering around 3% on the US 30-year. I'm going to check the dollar index at 106.59 today. Okay, guys, let's get ready and let's take a look at a few shots of the pets. And you guys have a great afternoon. Good day, ladies and gentlemen, and welcome to the pets section of the show. We're going to get started right away. I think what we'll do is we'll turn the charts on right here and take a look at some pets. The first pet we're going to take a look at is Tarzan. And boy, isn't Tarzan cute. He's got big, round, yellow eyes, perky looking ears, cute little chin, cute little whiskers, really, really healthy looking, and he's got that stance like he's ready to run, ready to rock and roll, and run across the bed or whatever, run across the floor. Anyway, cats are awful cute. This is a very cute cat. So this is Tarzan. And so let's move on to the next one. The next picture is of Otto. Now, sadly to say, poor Otto has passed away. But here he is with his owner's, probably his owner's glasses on. And he's looking very astute.
He's looking like he's very much an intellectual, Otto, is with these glasses on. When he gets the glasses on, he's an intellectual. But he's looking very astute here. Now we're going to move on to the next one. And it's Otto again when he's a puppy. And he is an awfully cute puppy. Here he is playing with his favorite toy. The green pickle, it looks like. Green Mexican pickle. And so he's chewing on the green Mexican pickle, and he's having a good time as a puppy. And he's a husky boy as a puppy. I can tell you that much. Let's take a look at our next picture here. And our next picture is of Gypsy. And Gypsy's got a lovely coat. Thick and plush, his coat. Of course, that can be, in the summertime, a thick plush coat like that can mean that you're kind of a hot, and it can make you hot, you know. And but Gypsy's here, he's relaxing. You can tell he's got that relaxed look on his face, and he's a very pretty dog. So now let's move on to the next picture, and the next picture again is of Gypsy. And Gypsy's looking out into the yard thinking of doing some gardening maybe that afternoon. He's got his wheelbarrow there, and he's saying to himself, well, when am I going to get started? Have the seeds arrived yet? Okay, guys. Thank you for listening to my show. Like and subscribe, and we'll catch you guys in the very next episode. Bye-bye.